Welcome back to Passing Notes with Chaz Guinn. My name is Hayes Brumbeloe. I am your host, and I am glad you're here. I just realized that my shirt is absolutely matching the wall back here, so I kind of look like a floating head today, which is cool. I need to get a jacket like yours. That is a sick jacket. I'm a huge fan. I don't know if I can pull that off. You can. I don't know if I can.
You may be able to pull this off in Miami or something.
Like a floating head right now. A floating head with arms.
If our viewers are, if you're listening to this, you may have to just log in.
You're gonna need to see.
So you can see this.
Yeah, because if you're just listening, it doesn't make sense. But man, it's a camouflage shirt. Good stuff. All right, well, let's jump back in. Episode 8. Today we're going to talk about actually a really important part of Revolve Capital's business, and it's the Revolve Collateral Management piece. For our audience, there's going to be obviously people who aren't familiar with what collateral management is. So let's talk about what it is and why buyers, one, need it, and two, should consider Revolve Capital for their collateral management.
You know, stepping into the collateral management side of the business for us was an effort to try and bring a lot more of the functionality of this business in-house. Mm-hmm. You'll see that servicing is done by a third party. You run your title docs from another third party. You run your valuations from another third party. You have door knocking from another third party, right? You have your documents with another third party, right? You're tracking now all of these different extensions of your core business, right? And so if you can try and monetize that into a single or household under the same umbrella, in other words, if that's what we are aiming to do. So for us in this document business, right, we're buying mortgage debt, and all that mortgage debt is collateralized by actual physical documents that tie you as a lender or an investor to the terms of the deal that you signed up for. Chances are you buy a 30-year mortgage that you bought in 2015 that originated in 2010, you now have only 25 years left on that mortgage.
Right.
Okay. So you need to be able to justify the terms of where they were in 2015.
Right.
Where is it at today? How long has it been delinquent? What's the term remaining? What's the last correspondence that happened with the homeowner? All of this stuff is tied to documents. Right. Okay. So for us, we said, look, we're managing so many different moving pieces. And so we wanted to really centralize that. We offer it for third-party servicing as well. Third-party collateral documents as well for other companies that we do a lot of transactions with. For them, it's an ease of keeping your documents in-house. We do a lot of trades together. Let's just say I offset or offload 100 loan portfolio to a counterparty that we transact with consistently. It makes a lot of sense to keep the documents right where they are. Just like if you buy a reperforming loan or a cash flowing loan, if you don't have to deboard the loan from your servicer and have it moved to another servicer, then you don't have to disrupt the deal. You don't have to send these new compliance letters that traditionally have to go out to the homeowner saying, hey, stop making your payment here.
Right.
Start making your payment here.
Right.
That usually causes folks some heartburn. Hey, whoa. What's going on here?
Right.
Is this company valid? Let me do my research, etc. Right? If I can avoid that disruption altogether in the cash flowing business, we try and do that as well on the document side of the business. So Revolve Collateral Management is our way to keep that all in-house and to stop kind of fractionalizing the business for a lot of our clientele.
Sure. And it's managing those documents. It's protecting those documents because those documents are kept in a secure spot here in Texas, right?
Yeah, secure spot, fireproof safes, well-locked door, all that jazz, right?
So let's talk about what some of those services look like. Obviously, some of the audience members may not be familiar with collateral management, and that's cool. But let's talk about what that means from a service point and how that can benefit a new note buyer or a seasoned note buyer.
All right, let's have some fun with this, right? Like we've all seen.
We've already seen my shirt and my floating head.
You're already seeing the jacket. It's like, all right, let's have some fun. We've all seen the movie Dumb and Dumber. And if you haven't, well, you've probably been living under a rock for a little bit, but check it out. Starring Jim Carrey and Jeff Daniels, right? And a part of the movie, they come across a briefcase, and the briefcase has a load of cash in it, legitimate cash. And they come across the briefcase. They're trying throughout the entire movie to get it back to the gal who dropped the briefcase.
At the airport.
At the airport. Now they come across the money, and they're like, uh-oh. Okay, we're going to spend some of the money, but we're going to put some IOUs back into the briefcase, so we're
Right.
going to pay them back. They had every intent. Yeah, right. That's the kind of the comical part of the movie.
That's a Lambo. You're going to want to hold on to that one.
They start buying the fur boots and the whole deal. But if you remember at the end of the movie, the entire briefcase now is filled with these IOUs. Your cash is now gone. Right? Like, so if you relate that to the collateral management side of our business, you notice that if you don't properly have your documents, your physical documents, and they're not intaked, and they're not properly really consumed from minutia details, terms, pay history, servicing comment, assignment chains, allonge chains, title policies, HUDs, all of your collateral documents tying you as the investor to the mortgage asset. This all, if you don't properly QC that, guess what you just did? Bought yourself a bunch of IOUs. A bunch of briefcase filled of papers that say I owe you back for these fur boots. Right? Now, what you don't want to do is have an IOU when you own 123 Main Street, anywhere USA, and when you get through foreclosure on a vacant property and you come to consume the real estate back, the documents don't tie. The judge says, no, you don't have the right pieces in place to continue the foreclosure for us to result it back into your name, your entity. Trouble, right? You just spent a lot of effort and a lot of work to not align yourself with the right company that got you squared away. And a lot of this is done, Hayes, in the due diligence process. So we offer pre-due diligence services here that allow you to really feel confident, sound, and verified prior to ever wiring dollars, prior to ever having to take on IOUs. Okay? There's a term in our business called the Bailey Agreement. And that says, look, I know I'm buying your documents from you, investor anywhere, but prior to close, just like an escrow for a traditional real estate deal, let me see the documents. Let me review everything from a title perspective, lien perspective, judgment perspective that wouldn't avoid my lien position. Okay? But let me have your documents shipped to my custodian under a Bailey, so we can confirm that all documents are in order before wires or monies have to be exchanged. So we offer those services. That's the way that we pre-purchase. That's the way we purchase. Look, I'll wire you my $1 million, $10, $50, $100 million, but prior to doing so, let me see all docs. Let me make sure all docs check out.
You better hope they're all there.
I'm gonna, you know how the gals will put the little finger rubber things on and they're going through, right? We got full of teams of doing that, right? And that makes sure that, look, we always say trust,
but verify.
Yeah, exactly. Right? So I'm trusting everything image-wise that we've seen to date. Hayes, investor, right? But let me see this under a Bailey and let me confirm it. Let me verify it, right? And these are all services that are done here in-house.
I'm looking at some of the services. I mean, does it make sense to go into detail about what some of those services are individually, or is it one of those things where it's just like it's one of those things where it's just a part of the business, and to have your everything in-house, you're buying your notes from Revolve Capital, you might as well keep all of your documents, because we do all that work on the front end. So that makes the transaction that much smoother.
I mean, so imagine, some of our top tier and clients and note buyers, let's just say they buy a few hundred assets a year from us, okay? But let's also say they have a few hundred assets with another custodian, per se, collateral management team. Now, it's a little bit harder. It goes back to, hey, you're managing multiple different companies. You're having different extensions of your business. So we said, look, we still offer that service for those other assets that are not ones we sold you.
So it is a la carte.
It is, right? It kind of depends upon the investor, the client. That they may say, no, we don't want Revolve. You don't need to house these. But over time, I think you start seeing the exceptional service, the transparency, the constant reporting, the live communication that you constantly get. It kind of helps folks to say, look, I'll kind of keep it all in one house.
And it goes back to, Revolve Collateral Management is really kind of a boutique offer where you can mold, our services to a client's needs.
Yeah, we're not trying to be the biggest. We're trying to be the best. I know that's a cliche, but it really is about quality for us. And we said, look, we know that we can be able to house, manage, communicate, offer this type of service for so many folks. And today we're not there yet, but what we do know is that in the pre-purchase, we're trying to normalize this side of the business, just like you would go into an open house on a weekend and buy a home. Okay, you and your wife walk into a house on a Saturday or Sunday, you like the property, You tell your agent to make an offer,
Right.
right? The offer's accepted. You guys open escrow, right? You're kind of hands off from that time period, aren't you?
Yeah.
You and your wife aren't the ones running title yourselves. You're not running the tax search yourself.
Right.
That's why escrow's there.
Right.
Right. So in this business, that doesn't feel the same on the due diligence side. But that's what what we're trying to do is to say, look, we know you're trying to buy this transaction or these transactions.
Right.
Okay. Let's normalize the pre-purchasing side.
Right.
Let's kind of make your hands-off approach that you took with the escrow feel the same way with our due diligence side. Okay. So now, the way that you're reviewing value, it's all about value when you're buying this real estate, right? We're real estate guys, right? So I know we're buying mortgage debt, but I'm buying the house first and foremost.
Sure.
Do I like the real estate if I'm gonna end up with it if they stopped paying me altogether?
Right.
So I've got to like the real estate. I don't care if it's in upstate Syracuse, New York, or if it's in Jackson Hole, Wyoming, right? Or Bozeman, Montana. Right?
I'll take the Jackson Hole, Wyoming.
Yeah, so me too, right? That place is on our tear.
I love that place.
So we'll get into that. So we said, look, we understand that the diligence side is one thing, but now what happens on this business, what happens now, very different from just buying a house on a weekend, is now you're buying potentially notes that you have a strategy behind. So now what we really want to consume and help our clients really start to normalize is the post-acquisition side of the business. So now I know I own the assets. Now what? What's my strategy? What's my time period for resolution?
Right.
Okay. So now, but guess what? I bought these documents. These documents have to transfer from servicer A to potentially servicer B. The documents have to leave that guy, and they came here, and now they're now with us. But now there needs to be name changes.
Right.
There needs to be assignment changes, AOM changes, allonge changes that all need to be properly recorded to verify your ownership of these assets anywhere USA. Right. So all of that is done again in-house. Doc prep, recording prep. Right? Title curative work. What happens when you buy documents today? We mentioned a few episodes ago, today's market, the arbitrage in the business is the documents that are missing.
Right.
Files are falling out of securitizations because of missing title policies, missing HUDs, missing 1003s from origination.
Right.
These are mandated items that need to be in a file to properly be securitized.
Right.
So for us, because we're not currently securitizing our assets, I don't mind if I don't have a 1003 from 2009. Hayes, I care about what's going on in 2022.
Right.
What's the employment status as of now? What's going on in home? Are you working? Can you stay and pay? Right? So our strategy very much well can change where we start getting into the securitization of stuff. So document prep, document identification is going to be huge for all types and size of investors. Folks that don't know about securitization, that don't get into that today, that's something that we teach and that we have as a potential exit strategy. However, the majority of our buyers are not securitizing their loans, but they need to understand what's in a file and what's not in a file. Now, did I get everything properly recorded? And can I now go do my strategic exit process? Meaning, do I want to get this person back to performing? Cash flow. Do I want to finish out foreclosure? Real estate. Am I looking for a fix and flip? Okay, finalize the foreclosure. Do I want an REO for a rental? Finalize the foreclosure. Or offer cash for keys or deed in lieu. Strategies we all really want to tee folks up with. But if your documents aren't properly recorded,
you never
and
get
you
there.
don't have, how can you move forward, Hayes?
You can't get there.
You can't. So that's why the curative, the post-acquisition, and the liquidation trade facilitation is another thing we offer. Here's what we realized. Folks are like, hey, look, I want to start trading notes, right? I know how to mod. I know how to do foreclosures. I don't know how to trade, okay? I don't know how to take these few notes that I don't want to finish the foreclosure. It's a year out, right? The modification play isn't there. It's vacant, okay? Now what? Okay, what if you traded those deals maybe to a local buyer that's far more patient than you are? And you just want to unlock the capital that's tied up in those properties so you can rinse and repeat it on other acquisitions. So now you can facilitate a trade, right? You can put these documents in a secured folder, have an Excel sheet put together, PSAs, purchase and sale agreements. You can have document prep, all line item clean in a folder that you're now trading like an actual trader. We're traders at heart here.
Sure.
So we act and we want to help facilitate these trades for these clients of ours so they can come back, rinse and repeat. We do far more volume together because they're not having their assets locked up in properties that the only way they get out of them is through foreclosure or a mod. I just showed that one of those two options ain't going to happen.
Right.
So now trade them, unlock the money, and let's keep going.
Excellent.
So we're offering that service as well. So get a little pumped up about
It's the
all
jacket.
fat.
It's the jacket.
I knew it.
You put that jacket on, you turn into Superman. Honestly, I think that hits. That really it nails it on what Revolve Collateral Management does and how important it is, especially if you're getting into the space for the first time. How important collateral management is to your business and to your growth strategy, and for seasoned buyers as well. Looking to bring on any and all who want to keep it in house. Obviously, Chaz does a great job of explaining exactly what that business is and what it means to you. But thank you for the insight on that. I think the audience is going to greatly appreciate it. That's all the time we have this week. Thank you so much for stopping by. Another great episode. Please make sure you like, you comment, and give us any insight on things you want us to dive deeper into. We'll peel back that brain of Chaz's and we'll put it on the next episode. Again, make sure you go to revolve-capital.com. There you can learn more about Revolve Collateral Management and how we can start serving you as well. Thank you for stopping by, and we'll see you next time. Cheers.